All right, welcome back to the Double Play channel, where I show you how you can put your money to work in two places at one time by leveraging the cash value of a maximum overfunded life insurance policy. Today, we're going to be talking about how you can achieve an infinite rate of return by investing with your life insurance policy, specifically by leveraging the cash value of a maximum overfunded life insurance policy. Or actually from any life insurance policy. I mean, if you've got a life insurance policy that has cash value, then clearly you can get an infinite rate of return by leveraging that cash value into a real estate investment, or any kind of investment for that matter. So if you want to know how this is possible, just stick around after the intro and we'll get started. All right, thanks for sticking around. I'm Tomrutkowski with Innovative Retirement Strategies, and this is the Double Play channel. And the goal of this channel and all of the videos and all the content here is to give you all of the information that you need without ever talking to a life insurance agent to understand life insurance, how it works, all the myths and misconceptions, and specifically how to understand how to use it for real estate investing. So today, we're going to be talking about how you can achieve an infinite rate of return on your real estate investments by utilizing the cash value of your life insurance policy. And in order to do that, I'm going to start off by just explaining what is an infinite rate of return. Then I'm going to show you how you can do that with your cash value. And then I'm going to follow that up with a bunch of different examples to kind of try and drive home the point. So if you find these videos valuable, please go down below and like this video, give it a thumbs up, and then subscribe to this channel so that you're notified whenever I come out with new videos. I've also got a link in the description where you can buy me a cup of coffee, a little bit of support to keep this channel going and all these videos. Again, the goal of this channel is to keep you from having to talk to a life insurance agent. So any support is greatly appreciated. Before we get started, take care of a few housekeeping items. I just want to point out that all of this information is purely educational. There is no tax advice, no financial advice, no legal advice, and the primary purpose of life insurance is for the death benefit protection. Any other benefit is purely ancillary. And in this video, that's actually going to come in handy, and I'm going to show you why. So let's get started. All right, so what is an infinite rate of return? An infinite rate of return occurs anytime that you do a deal and you don't have any of your money in the deal. So if you think about it, the return on investment calculation is basically the return that you received divided by the investment that you made. So if that investment is zero, there is no investment, and the return approaches infinity. If you don't believe me, break out a calculator right now and just try to divide 1 by 0. You're going to get an error message. And the reason that you're getting an error is because infinity is not a number. So the way to basically illustrate this, for lack of a better term, is take your calculator and divide 1 by 10. So that would assume like a $1 return on a $10 investment. 1 divided by 10 is 1/10, or a 10% return on investment. You can flip that around and make it where you've got a $10 profit for a $1 investment. If you divide 10 by 1, you get 10, which is 1,000% return. If you go even further and you divide 10 by 1 cent, 0.01, you're going to find that you're going to have a much higher rate of return. And you can understand that as you decrease, make the denominator even smaller and smaller and smaller. As the denominator approaches 0, the overall rate of return approaches infinity. So that, since you can't divide a number by 0, all you can do is approach infinity. So that's what we are referring to when we refer to an infinite rate of return on a real estate investment. That's when you do a deal with other people's money. That can be with borrowed home equity to purchase a property. That can be with cash value life insurance. That can be with bank financing, if you can find a bank that would finance 100% of your investment. So Now the question is how do you achieve an infinite rate of return? By leveraging the cash value of a life insurance policy. So it's important to understand that a policy loan is not you withdrawing your own cash from the policy. A policy is quite literally a loan of the insurance company's money that is secured by the cash value of your policy. So again, it's important to understand that the cash value never leaves the policy. The life insurance policy is a totally separate entity. Remember, what I said earlier, the purpose of life insurance is for the death benefit protection. Any other benefit is purely ancillary. So when you or if you choose to leverage the cash value of a life insurance policy, you're doing that as something separate from the policy itself. That's something that you can do, but it's not, the life insurance itself is not your investment. So now that we've established that a policy loan is the insurance company's money, we understand that the policy loan is other people's money. So anything you do with that money that creates value on top of the cash value is achieving an infinite rate of return, because you've done that investment with other people's money, with the insurance company's money. So I know it's tempting to try and think that the life insurance is part of everything, that if I'm putting the money into the life insurance and then I'm leveraging the life insurance, I'm achieving an overall greater rate of return, the double play, right? But it's important to understand that the life insurance is separate. That's an asset that you have. That's not part of the investment that you're making. A similar way to look at it would be if you were to use home equity to make an investment, you wouldn't count the money that you got in the house as part of your subsequent real estate investment. By the same token, if you borrowed against other investment properties to get the cash you need for another deal, you wouldn't count that initial investment as part of the subsequent investment. You would only look at the infinite rate of return opportunity that you have on the subsequent investment. So let's take a look at some numbers here. All right, so in this example, we're assuming that the client has about $100,000 of cash value that he can leverage in his life insurance policy, and we're assuming that the policy loan interest rate is 5%. Now, I'm using 5% just to keep the math simple, so that everybody can follow along, so that I can do the math in my head. But in today's terms, and this is again January of 2022, interest rates on policy loans are right around 3.25%. You can get a line of credit against your policy at around, it's linked to the Moody's corporate bond yield, which is around, the policy loan rates are around 3.25% now, give or take. You can also go to a third-party bank and get a cash value line of credit at about prime. Most of those cash value lines of credit are tied to the prime interest rate. And again, so that's about a 3.25% interest rate that you're going to get on policy loans. We're also assuming that the investor is loaning or making a private loan to another real estate investor at a 10% interest rate, and that our client is subject to a 40% income tax. So if we look at the numbers, the client is making a $100,000 loan, private loan, to an investor, and let's just assume this is a 12-month loan, and in a year he's closing out his policy loan, he's closing out his investment, he's got his principal back from the investor, he's earned $10,000 of interest on that. So the first thing he needs to do is cash out the policy loan. So it's going to take $5,000 at 5% on $100,000 to close out the policy loan and interest. That leaves $5,000 of taxable income. And in the 40% tax bracket, he's going to write a check to the IRS for $2,000, and that leaves him with a $3,000 return on his investment. So understand that there really is no investment here. He borrowed against his policy, so none of his own money in the deal. He created money out by making that loan. He paid the taxes on it, and he's left with $3,000. So that $3,000, when you think of the double play, is in addition to however much the cash value made during the same time. So If we assume that the cash value is making a 5 or 6% dividend, let's just say 5%, then 5% plus the 3% created outside, that's the double play. You're making a total of 8% on the money that you had in the life insurance policy. So again, I mean, it all depends on how you look at this. You know, if you understand that the loan is something separate from the life insurance policy, you understand that anything you do with it is an infinite rate of return. And I know some people have a hard time understanding that, but that is truly what it is. So what I want to do now is I want to look at just a couple of really simple scenarios to try and illustrate the benefit of this. And I'm going to start from a baseline scenario where we're just looking at return on our own money, and then we're going to introduce leverage into that, and then we're going to really beef up the returns by adding the power of the policy loan in conjunction with third-party financing. So let's take a look at the first example. In this example, the client is using his own money, $100,000. Let's just say he's making another private loan and he's got a net annual return of $10,000. And if you plug that into the return on investment function, which is basically the return divided by the investment that you made, 10,000 divided by 100,000 is a 10% annual, or in this case here, it wouldn't be an annual ROI because it's just a one-time private loan. I think when I had come up with this example, I was thinking in terms of a rental property that generated $10,000. So it's all relative. These are just numbers for example's sake. So again, this is the client using his own money, putting into an investment, making $10,000, 10% ROI. In this second example, the investor is scaling things up a little bit, and I probably should have illustrated this a little bit better, but let's just say that the client takes his $100,000 of cash and goes out and gets $400,000 of additional bank financing to basically purchase a $500,000 income property that generates $50,000 net by the end of the year. So we're looking at basically the same relative 10% return per dollar of asset investment. But in this case here, once we plug the numbers into the return on investment function formula, we've got a $50,000 return divided by a $100,000 investment. Remember, $400,000 of that money came from the bank. So there's $500,000 total in the deal, but the investor only has $100,000 of his own money. So $50,000 divided by $100,000 gives him an annual return of an annual ROI of 50%. So now let's really scale things up. Let's just say instead of taking his own $100,000 and putting it into the deal, now he's taking the $100,000 as a loan against his life insurance policy. So he's borrowing $100,000 secured by the cash value of his life insurance policy. He's using that to make the down payment on the property and financing $400,000 to purchase the $500,000 property. So now we're looking at a $500,000 property that's being purchased completely with other people's money. So the investor has no money of his own in this deal. And it's the same numbers. It's a $50,000 annual return. That's the numerator. And the denominator is 0 because he's got no investment in the deal. And you can't divide 50,000 by 0, you get infinity. That's an error. You get an error when you try to put that into your calculator. So here you can see that you can really scale things up by utilizing leverage. The combination of bank financing plus using the life insurance policy loans to finance your deals. It is the easiest way, I think, to get an infinite rate of return in the real estate game. All right, so let's wrap things up. What I did in this video is I explained what an infinite rate of return is and how you can achieve it by utilizing the cash value of the life insurance policy. Any life insurance policy. I mean, it's ideal specifically with maximum overfunded policies, but if you had a policy lying around that has cash value, there is no reason why you could not leverage that cash value to do whatever you want. And then finally, I showed you a bunch of examples illustrating how the infinite rate of return works with life insurance into real estate investing. So if you're hungry for more information and you're not ready to talk to a life insurance agent yet, I highly recommend going out to Facebook and joining my Double Play group there. And that's a community of like-minded individuals who are all either doing or interested in doing the double play, with leveraging high cash value life insurance for investing in real estate. Subscribe to my YouTube channel. If you're feeling generous and you want to support me in the production of these videos, there's a link to Buy Me a Coffee. I would greatly appreciate any support. You can also find a ton of information on my website. Basically, again, the goal of this channel and all of my content is to give you the information that you need without ever having to talk to a life insurance agent. Frankly, the only time that you need to get me on the line is when you're ready to see an illustration and what the numbers will look like for you. So with that, I will see you in the next video.